Hey everyone, welcome back. I hope you are safe and healthy. Wanted to do a quick update here because a lot has changed in the last month or so for ASML Holding, ticker symbol ASML. So the last video I did on this a little over a month ago, the stock was hovering at about 400 to 450 bucks a share as I recorded the video, and then by the time it finally published. Today, this thing has popped almost to 600 bucks a share, nearly 600 bucks a share, at times nearly a 60% run up. This has been a big jump. So the last update was regarding third quarter 2022. What in the world has changed other than everyone's feeling a bit more antsy about 2023 and a big economic slowdown, maybe perhaps even a recession? Let me show you what ASML shared on their investor day. So I want to share this slide first because this is really interesting. On a semiconductor show last year, there was big news. Global sales of chips surpassed 600 billion for the first time. In 2022, we're going to exceed that number again, over 600 billion in annual sales across the globe. But there were some announcements that the industry was going to reach 1 trillion in sales by the end of this decade, by the end of the 2020s. But some newer estimates here, you can see ASML shares in their investor day, up to $1.3 trillion. So a doubling in the value of chips sold every year by the end of this decade. These are huge, huge increases for ASML. And you can see here from this slide, it's really across the board where this growth is expected to come from. So you see NAND and DRAM, two different types of memory chips, expected to grow on average of mid-single digits each year, an average of each year. Advanced logic, so those are high-end chips used in things like cloud computing, high-end computing in the cloud, AI, that sort of thing. Low double-digit, low teens percentage average growth, and then even mature chips. So these are things like automotive, industrial electronics, mature chips. This is not new cutting-edge technology. It's been around for a long time, but these are things that the industrial markets, automakers like to use because they're tried and true semiconductors. This is expected to see a huge surge in demand in the next decade, driven by things like this transition to electric vehicles, energy efficiency in the energy grid, plugging batteries into it to help make things like solar and wind more efficient, industrial applications where robotics are helping speed up or make manufacturing more efficient. All of this plays into the hand of ASML. So at this point, you're probably wondering, okay, what does this actually mean for ASML? Well, at the company's 2021 investor day, they had said they expect revenue of 24 to 30 billion euros by 2025. Well, that number has been updated by a significant sum. You can see the expectation now for 2025, just a year later, up to 30 to 40 billion euros. Huge increase. And what's interesting about this is, remember I said a lot of us are worried headed into 2023 about a recession. Well, someone forgot to tell ASML and the chip industry a lot of ASML's equipment to manufacture chips is expected to get sold in the next few years, as a lot of companies like Intel, Taiwan Semiconductor, and others purchase their machines to either upgrade or build brand new chip fabs or manufacturing facilities for chips. Longer term, looking out to 2030, the company sees revenue being between 44 and 60 billion, A huge increase. Just for reference, right now, as I record this, over the last trailing 12 months, so through the end of September 2022, ASML did revenue of just over 22 billion euros. So the company sees doubling its sales, at least doubling its sales by the end of this decade. Now, basically what this means is, I would say, like on average, let's maybe just take the midpoint of the company's expectations for 2025 and then 2030. Let's say revenue for the company grows roughly 9% to 12% a year on average for the next few years. But remember, ASML repurchases stock. They're always looking to expand their profit margins a little bit along the way. So actual profit growth, I think, will be a little bit higher because of this expansion of their profit margins. The stock repurchase program, take a look at the video we did a couple weeks ago on employee stock-based compensation. Share repurchases basically do the opposite of that. They shrink the number of shares. So basically, to compare this to a pizza, a bigger pizza over time, fewer mouths to feed, it means more profit for you and I as shareholders. So basically, I think this company's profits will grow somewhere in the low to mid-teens percentage on average over the next few years. This is a great stock. It was way too cheap a little over a month ago, thus the big run up in stock price. Now, here's where things get a little bit interesting and where we're going to slightly depart from ASML, because I lured you into this video talking about why I like the company more than Intel, Taiwan Semi, the new Warren Buffett stock, and some others. Let me show you this slide again from ASML's Investor Day. So here's that slide again. And notice at the top, they title this slide, Technological Sovereignty and Foundry Competition Create Additional Capacity. So we talked in these videos before about the US CHIPS Act, basically about $52 billion in funding earmarked for expanding semiconductor manufacturing in the United States. Other countries are doing this as well. Europe is embarking on this, even though Europe has very little chip manufacturing as a percentage of global market share. But Europe's investing here. Taiwan is, South Korea, Japan, you name it, lots of countries, if they already have some existing chip fabrication capabilities, they're investing, the governments are investing money to get more foundries, more chip fabs built in their country. Here's just the top three. Again, Intel, Taiwan Semiconductor, and South Korea's Samsung. You can see all of these big investments getting lots of extra support here. But here's what's interesting, going back to the slide. See here, by 2030, this kind of light green, 10%, approximately 10% inefficiency, or an additional 18 million wafer capacity by 2030. Basically what ASML is saying here in this, that in this race to build new chip fabs in countries, the companies making these investments and getting some support from local governments are creating new inefficiencies in chip manufacturing. So at some point, there's going to be too many chip fabs and not enough demand for the output that they're able to ship out the door. So let's use like a classic widget illustration, just to kind of explain what's going on here, what ASML is seeing happening over the course of the next decade. Except we're not going to do widgets, because this is the Chip Stock Investor channel. Instead of calling it widgets, we're just going to call it chips. So let's say you are a business and you manufacture chips. You have the machinery to do it, and you can crank out 100 chips, and your customers buy all 100 of them. You are running at full capacity. You're selling everything that you can make. You're happy. But your customers come to you and say, hey, we need 80 more chips. Well, your existing machinery is already running at full capacity. So you go out and you buy new machinery that can also produce another 100 chips. Problem is, your customers are only asking for 80 chips. So you have this overhang where you can actually run at full capacity making 200 chips, but your customers only need 180. You have a 10% inefficiency. So you're probably still happy that that second batch of machinery you bought, it's enabling you to sell 80 more chips than you were able to before. Issue is that second batch of machinery isn't as profitable as the original equipment that you had running at 100% full capacity. So basically what I'm saying here is this is yet another reason why I am preferring to invest in companies like ASML. Also Applied Materials, ticker symbol AMAT, versus companies like Intel or Taiwan Semiconductor. There's kind of a little bit of an arms race going on here between companies like Intel, Taiwan Semi, Samsung, and other smaller players as well. And as they invest and get some help from local governments to ramp up production in the coming years, they're creating some inefficiency. We don't know just how profitable these new manufacturing capabilities will be. So I like the chip equipment makers like ASML and Applied Materials better. There's an excess of manufacturing capacity at some point. Some purchases of their equipment will also probably hurt. But along the way, I think the most profitable way to play this run up in chip manufacturing is the equipment makers themselves. That'll be a wrap for this take on ASML. So I just mentioned Applied Materials. They also had a fantastic quarterly earnings report that handily beat expectations last week. Stay tuned for that video. I'll tell you what happened and why I also like that company as well over the long term, in addition to ASML. Make sure you hit the like button, hit the subscribe so you don't miss a video. Appreciate the support. Thanks, everyone. See you again real soon.